Have you ever felt like you're always a step behind in the market, missing those key entry and exit points? Imagine if there were an indicator that could help you spot potential reversals before they even happen. Well, that's exactly what I'll be showcasing today, a powerful tool that blends price and volume to give you an advantage in the market. If you get something valuable out of this video, don't forget to drop a like. First, we will add the VWAP Z-Score indicator to our chart. For this, head over to TradingView. It's the platform I'll be using. Once you're set up, you can load any trading security you prefer on any time frame. This indicator is super versatile and works across the board. Now click on the Indicators tab, search for VWAP Z-Score with signals, and select the one by this amazing scripter. So what exactly is the VWAP Z-Score indicator? In simple terms, it measures how far the current price deviates from the volume-weighted average price VWAP in terms of standard deviations. This deviation is called the Z-score. By doing this, the indicator helps identify overbought and oversold conditions in the market, highlighting potential reversal points. The VWAP is a key metric used by institutional traders to gauge the average price of a security weighted by volume. Knowing how far the current price is from the VWAP gives you a sense of whether the market is overextended in one direction or another, and the Z-score quantifies this to provide actionable insights. The VWAP Z-score indicator has several main components. First is the Z-score line, which oscillates above and below zero. When the line is above zero, it indicates a positive Z-score, showing that the current price is above the VWAP. The higher the Z-score, the further the price is from the VWAP and standard deviations. When the line dips below zero, it signals a negative Z-score, meaning the price is below the VWAP. The lower the Z-score, the more the price is below the VWAP. Next are the upper and lower thresholds, each consisting of two levels, the upper threshold top and bottom, and the lower threshold top and bottom. These levels help indicate whether the market is overextended. The indicator generates buy and sell signals based on these thresholds. A buy signal occurs when the Z-score line crosses above the lower threshold, indicating that the price has reached or dipped below this level, suggesting potential oversold conditions and a possible upward reversal. Conversely, a sell signal occurs when the Z-score line touches or crosses the upper threshold, signaling potential overbought conditions and a possible downward reversal. Now let's take a look at the indicator settings and how customizable it can be. The first option is the Z-score length, which defines the period over which the VWAP Z-score is calculated. The default setting is 14, but you can adjust it to fit your trading style or preference. Then we have the upper and lower thresholds, which define the Z-score levels considered overbought and oversold. A typical upper threshold value is 2, indicating the price is 2 standard deviations above the mean. Similarly, the lower threshold value is -2, representing 2 standard deviations below the mean. For this video, we'll set the upper threshold bottom to 2 and the lower threshold bottom to -2. Also, be sure to enable the show signals option so that buy and sell signals are displayed on your FET. Once you've adjusted everything, click OK to apply the settings. Let's explore how to trade with this indicator, starting with divergence trading. A divergence occurs when the price moves in the opposite direction of an oscillator, like the VWAP Z-score. For instance, let's look at a bullish divergence. Imagine the price has been declining up to a point where the Z-score line enters the bottom threshold, indicating potentially oversold conditions. But on the chart, the price doesn't immediately go up. Instead, it drops further, consolidates, and even breaks below the previous low. If you look closely, you'll notice that although the price made a lower low, the Z-score oscillator was establishing a higher low. This is a classic bullish divergence. Before taking this trade, we need to wait for bullish confirmation signals. I typically look for bullish engulfing candles, so if a bullish engulfing candle appears, we'll go long. Set your stop loss just below the recent swing low to give the trade some breathing room, as this is a reversal entry. Set the take profit at a 1.5 to 1 risk reward ratio. If we let the trade run, you'll see it turns profitable. To take a short position, you'll look for the opposite conditions. Now let's dive into the second strategy, trading pullbacks. Before that, we need to add a trend indicator to filter trades based on the trend. Search for the indicator 7EMA_5MA created by Storewise and open the settings. Under the inputs tab, set the EMA1 length to 50 and the EMA2 length to 100. Then in the style tab, disable all the moving averages except for the first two EMAs. Set EMA1 to red and EMA2 to green. These two EMAs help us filter trades based on the trend. If the price consistently trades above both EMAs, it suggests a bullish market, and we only look for long positions. Conversely, if the price is below both EMAs, we focus on short positions on pullbacks. Let's see an example. In this case, the market is bullish with the two EMAs aligned, the green EMA away 100 period below the red EMA 50 period, and the price trading above both EMAs. Our next step is to wait for a pullback indicated by the VWAP Z-Score entering the bottom threshold, suggesting a slightly oversold condition within this bullish trend. A blue upward arrow signals this pullback. We then confirm the end of the pullback by looking for a bullish engulfing candle. If we don't see an engulfing candle on the first green candle, we check the second. In this case, the first green candle was engulfing. So we entered a long position here, set the stop loss under the recent swing low and the take profit at 1.5 times the risk. As the trade plays out, you'll see it was profitable. Let's apply the same strategy in a bearish trend. Here, the price trades below both EMAs, confirming a bearish market. We wait for the Z-score to enter or touch the upper threshold, signaling the market might be slightly overbought in this bearish trend. A blue downward arrow signals this pullback. To confirm the pullback's end, we wait for a red engulfing candle. If the first red candle isn't engulfing, we check the second. In this case, the first red candle was engulfing, so we entered a short position, placed the stop loss above the recent swing high, and the take profit at 1.5 times the risk. This trade also turned out profitable. The VWAP Z-Score with signals indicator uses both price and volume data to give a more comprehensive view of market conditions. By identifying significant deviations from the VWAP, you can spot overbought and oversold conditions that may lead to reversals. Combined with EMA trend analysis, it helps align your trades with broader market momentum, increasing your chances of success. That's the VWAP Z-Score with signals indicator, a powerful tool to give you an edge in the markets. Try it out in your strategy, and if you do, let us know how it goes in the comments. Thanks for watching, and I'll catch you in the next video.